Sunshine on my face, my friend. Feel the rhythm in my feet. Every moment is
All right, so we're diving deep today
Deep.
into all the market intelligence we can get our hands on
Global market outlook.
for Q4 2024.
That's right.
And we've been sifting through
Multiple analysis.
multiple expert analyses so you don't have to.
Exactly.
And by the end of this deep dive,
You'll be able to sound really smart.
you'll be able to confidently discuss
Yeah, all the major trends.
the major trends, opportunities,
risks.
yeah, the whole 9 yards.
So where do we start?
Well, I think a good place to start is what is the global,
like the pulse check.
yeah, like the global snapshot.
I'll see that.
Developed markets
Okay.
like the U.S. and Europe
Mm-hmm.
showing some serious strength.
Okay, so like a good sign.
Green light.
Green light. Yeah.
100% market strength signal.
Now what does that mean?
That's based on a few things.
Okay.
Strong economic recovery post-pandemic.
Makes sense.
Corporate earnings are looking pretty impressive. Resilient stock momentum. So for someone who maybe is just kind of getting started with investing,
Getting their feet wet.
yeah, what does that signal really mean?
It means that companies in these developed markets are doing well.
Okay.
And it's a positive sign for investors.
Yeah.
Because it indicates a healthy economic environment.
So things are moving in the right direction.
For the most part, yeah. I mean, for example, the S&P 500, which tracks 500 of the largest U.S. companies, showing some pretty impressive momentum.
Okay.
And for you, that means your investments tied to that index could see some potential growth.
That's what we like to hear.
Exactly.
All right, so developed markets.
Looking good.
Green light. Emerging markets.
Yeah. What about
Asia, Latin America, Africa?
Are they mirroring this trend?
So while they hold a lot of potential, emerging markets are sending more mixed signals. They range from like a low 2% strength.
All the way up to 25% in some areas.
So a pretty big range there.
Yeah, wider range. Tells us there's more volatility and uncertainty at play.
So maybe not as stable.
Yeah, weaker growth projections. Compared to developed markets. And economic uncertainties unique to those regions are making investors a bit more hesitant.
So it's kind of like, okay, you walk into a bakery.
Okay, I like this.
And there's two cakes.
Right.
One is like this beautiful vanilla cake. Yeah, classic.
With the sprinkles and everything.
Yeah, and it smells amazing.
That's your developed market.
And then there's this other cake that's a little more
exotic.
Exotic, yeah, like you're not really sure.
Yeah, what's in it?
But it could be good.
Could be really good.
Yeah, so that's your emerging markets.
You just got to consider your taste.
Yeah.
How adventurous are you feeling?
Exactly. Exactly.
Yeah.
Now, here's where things get a little
tricky.
Yeah, a little puzzling.
Okay.
So we're seeing all these positive signals overall.
Right. Yeah.
But the actual trading volume, which is the number of shares being bought and sold, is actually really low.
How low are we talking?
We're talking only about 1.1%.
Interesting.
So it's like everyone is window shopping.
They're just browsing.
But not buying.
Yeah. What's going on there?
So what's making investors so hesitant?
So that low trading volume suggests investors are a little hesitant to fully commit despite those positive indicators. It's like they're seeing that delicious cake. They're taking a tiny bite.
You're just not sure.
But something's holding them back.
So what's holding them back?
Well, one factor is the looming possibility of a recession in the U.S., which currently has a probability of 57.5%.
So not a certainty, but...
Not a certainty, but enough to make investors think twice before going all in.
Before you buy the whole cake.
Exactly. Yeah. So it's almost like a tug of war between these positive market indicators and that underlying fear of an economic downturn.
And plus the global economy is...
Oh, yeah. It's all connected.
It's a spider web.
You know?
So if one part of the web vibrates...
The whole thing feels it.
The whole thing, yeah.
So even if things are looking great in the U.S., events in other parts of the world...
They definitely have ripple effects.
Absolutely. Okay, so what's another factor
Yeah.
contributing to this hesitation?
Okay.
The ongoing Russia-Ukraine conflict.
Yeah.
Creating uncertainty
Yeah.
in the energy sector. And beyond, making investors cautious.
Okay, so we'll dive into
We'll get into that a little
the
bit.
impact of geopolitics a little bit later.
A bit later.
So we've got this really interesting contrast.
Yeah.
We've got the strong market signals, but hesitant investors.
It's like everyone's waiting to see
What's going to happen?
how things will play out.
Yeah. All right, so let's zoom in a little bit
Okay.
on some specific sectors
All right. I like it.
that are catching everyone's eye.
Let's narrow it down.
Yeah, so in developed markets, which ones are looking particularly attractive?
So technology and healthcare are shining brightly.
Really?
Yeah.
So there's still
They're booming.
innovation in both sectors.
Okay.
The demand
For
cutting-edge digital services, advanced health solutions, isn't slowing down.
And, I mean, if you think about it, like how much we rely on technology.
It's everywhere.
It's everywhere.
It's part of our lives.
And how important health and wellness is becoming.
Absolutely.
It's no wonder these sectors are...
They're attracting attention.
Yeah.
Yeah.
Okay, so let's flip the coin a little bit.
All right, flip it.
And look at emerging markets.
Okay.
Are there any sectors that are kind of standing out there? So energy and materials are sectors to watch closely. They're definitely more volatile due to those fluctuating commodity prices.
Right.
But they're also tied to global demand. So as economies grow, the need for energy and raw materials increases, creating potential opportunities in these sectors.
So if you're okay with
a little bit of risk,
a little bit more risk, energy and materials might be worth
exploring. Yeah, but do your research.
Yeah.
Don't just jump in blindly.
No.
Understand the specific dynamics
of each market.
Exactly.
Yeah.
And what's driving those price fluctuations.
No, I can't let you go.
Oh, here we go.
Without addressing the elephant in the room.
The elephant, okay.
Which is geopolitics.
Right.
The Russia-Ukraine conflict. Ongoing U.S.-China trade tensions.
Yep.
This is undoubtedly impacting the market.
Sure.
So how significant is this impact?
Geopolitical instability always adds a layer of complexity to the market.
Okay.
For example, those U.S.-China trade tensions, they could impact supply chains, potentially lead to increased costs.
For certain products.
For certain products, yeah.
Okay.
Russia-Ukraine conflict, creating major uncertainties.
In the energy sector.
Yeah, in the energy sector, particularly in Europe.
Which relies heavily on
Russian gas.
Yeah.
So these geopolitical events could definitely trigger market corrections, particularly in those sectors that are directly affected.
So like
energy, defense, technology.
So it's all about staying informed.
Yeah, absolutely.
When it comes to geopolitics.
Stay informed and understand those potential ripple effects that come with it.
Okay, now let's take a closer look at emerging markets.
Right.
We talked about some of the challenges earlier.
Yep.
But I want to dive a little deeper into China.
All right.
Because it seems like their economic recovery.
Yeah, it's not quite...
It isn't quite living up to
expectations.
Yeah.
So China's economic recovery has been slower than anticipated.
Okay.
The strict pandemic lockdowns they implemented had a significant impact.
Okay.
And then there are those regulatory crackdowns on the tech and real estate sectors, which have shaken investor confidence.
So it's like they hit the brakes.
Yeah, a little too hard.
A little too hard.
And now they're trying to regain momentum.
Okay.
Yeah.
And this slowdown in China.
Right.
It's the world's second largest economy.
Exactly.
So it has implications for the entire emerging market landscape.
Big time.
So that's a major reason for
that cautious sentiment.
When
we talked about.
Yeah. Okay, so China's internal challenges are sending ripples
throughout
the global market.
Yeah, yeah.
Okay, so another layer of complexity.
Another layer
to consider.
Absolutely.
Now, what about other emerging markets? What unique challenges are they facing?
So Latin America and Africa, they're grappling with this roller coaster of commodity prices.
Okay.
Think about essential resources like oil and copper.
Okay.
And then there's the persistent challenge of inflation, which erodes purchasing power and can stifle economic growth.
Okay, so just a reminder that investing in emerging markets comes with a different set of risks.
You gotta.
And requires careful consideration.
You gotta consider carefully.
Okay, now before we wrap up this part of our deep dive,
yes,
I want to talk about the human element.
Okay, the human element.
We've thrown a lot of data and analysis your way.
It's a lot.
But at the end of the day,
people
are the ones making these investment decisions.
Right.
So how are investors feeling amidst all this uncertainty?
So the Economic Uncertainty Index, which measures investor sentiment, currently at a rather high 80.3%.
80.3. So what is that?
So imagine you're walking through a forest.
Okay, I like this.
And the path ahead is shrouded in fog.
Okay.
You can see a few steps in front of you, but beyond that, it's all a bit blurry.
Okay. Yeah.
That's what this high uncertainty index feels like.
For investors.
Yeah, for investors.
So they can't really see.
No. They're a bit nervous about the future, unsure of what lies ahead. They're concerned about things like potential market disruptions, unexpected economic policy changes, and even those ongoing geopolitical tensions we discussed.
Right. It's like a proceed with caution sign.
Yeah, flash
It's flashing for many investors.
Proceed with caution.
Yeah, it's fascinating how all this stuff
It's all connected.
plays into people's emotions
Human behavior.
and influences their decisions.
It's fascinating.
So we've covered a lot of ground.
A lot.
We've unpacked the global market outlook, explored opportunities and risks.
In various regions.
In various regions and sectors.
It's a lot to process.
It is a lot to process. So let's take a moment.
Breath.
Yeah, we'll be right back to continue our deep dive.
Sounds good. Welcome back to our deep dive.
Okay, so given everything we've talked about.
It's a lot.
It is a lot. What are some key takeaways?
For investors.
Yeah, for investors who are trying to make sense of all of this.
Well, first and foremost,
diversification.
Your best friend in this environment.
Don't put all your eggs in one basket.
No, especially when there are so many moving parts.
Right, okay.
So think about spreading your investments
across
different regions, different sectors, just like a farmer plants a variety of crops.
Okay, I like that.
To ensure a successful harvest no matter the weather.
So, balanced portfolio
is key.
What else should investors be considering?
Look for sectors with strong momentum.
Okay.
And a track record of resilience in developed markets.
Yeah.
Technology and healthcare.
There's still continued
attractive options.
Yeah.
Driven by innovation.
Okay.
Long-term trends. Like the increasing digitization of our lives.
Right.
Growing focus on health and wellness.
Yeah, so it's like investing in
the building blocks of the future.
Yeah, okay, what about emerging markets?
Yeah.
Any specific sectors there?
Energy and materials.
Okay.
Could be interesting plays.
For those with a higher risk appetite.
Yeah, if you can stomach it.
Okay, so
remember, they're inherently more volatile, fluctuating commodity prices, but tied to global demand.
Right, so as economies grow,
exactly,
populations increase.
You need more.
We need more of this stuff.
Energy to power homes and industries.
Yeah.
Raw materials to build infrastructure.
So there's that potential.
Potential for growth.
But you need to be careful.
Careful research.
Oh, okay. Now let's circle back
to
geopolitics.
The elephant in the room.
Yeah. How can investors navigate these uncertainties?
It's tricky.
Yeah. Created by conflicts, trade tensions.
Like trying to predict the weather patterns. In hurricane season.
So it's very unpredictable.
Exactly. Geopolitics is always a wild card.
Yeah.
Staying informed, global events, understanding how they might impact specific sectors and regions is crucial.
Okay.
So, for example, an escalation of the conflict in Ukraine could disrupt global supply chains for key commodities. Like wheat leading to price increases or increased trade tensions between the U.S. and China could make it more expensive for companies to do business.
So it's really all about flexibility and adaptability. These days,
gone are the days of set it and forget it. Investing.
Yeah.
So being able to adjust your investment strategy as needed is crucial.
All right. So another strategy to consider
is focusing on companies with strong fundamentals and a global reach. These companies tend to be better equipped to weather those geopolitical storms.
Like a sturdy ship.
Much like a sturdy ship can handle rough seas.
Okay, now I want to go back to
the
Economic Uncertainty Index.
Okay.
What can we learn from this?
This high level.
High level of uncertainty. And how can investors use that information
to their advantage.
Yeah.
So a high uncertainty index tells us
investors are nervous.
Investors are nervous.
Yeah.
It's like walking on a tightrope.
Okay.
They want to move forward,
right.
but they're also wary of taking a wrong step.
Yeah, you don't want to fall off.
Exactly.
Okay.
And this often leads to a flight to safety.
So where do they go?
Where investors seek out havens. Okay.
Like government bonds, large cap stocks, with a proven track record.
Okay. So like
kind of bunker down mentality.
Like batten down the hatches.
Exactly. Yeah. Seeking stability amidst the turbulence. Yeah. However, and this is important, uncertainty can also create opportunity.
Really?
Think of it like a clearance sale.
Okay.
When others are fearful. That's often when savvy investors
can swoop in.
Can find those hidden gems.
Okay, so
maybe a stock that's been unfairly punished by the market downturn.
Okay.
Or a company with strong fundamentals.
Right.
That's being overlooked because of those short-term anxieties.
Okay, so turning fear
into opportunity. Requires a certain level of confidence and a willingness to go against the grain.
Okay. Yeah. Now let's shift gears a little bit.
Okay.
Talk about the human side of investing.
Human side.
Yeah, we've discussed all the numbers.
All the data. The trends, geopolitical risks.
It's a lot.
But at the end of the day,
people are the ones.
People are making these decisions.
Making the decisions.
Yeah, so what advice would you give to someone who's feeling overwhelmed by all of this?
It's easy to get caught up in the headlines and the market swings.
Right.
It can feel like an emotional roller coaster. But remember to focus on your long-term goals.
Right.
Investing isn't about timing the market perfectly.
Right.
It's about time in the market.
Time in the market. Okay.
So stay focused on your financial goals.
Whether it's
saving for retirement, buying a house,
funding your children's education, all those big life things.
Exactly.
Yeah, that's really important.
Don't make impulsive decisions.
Yeah, that you might regret later.
Especially
when emotions are high.
And this is where having a trusted financial advisor can be incredibly valuable.
Okay.
They can act as your guide, helping you navigate those complexities.
Right.
Provide objective advice.
Okay.
Making sure your investment decisions align with your risk tolerance.
Okay.
And your long-term goals.
So like having a seasoned captain.
Yeah, like a seasoned captain on board your ship.
Who's weathered a lot of storms.
Weathered many storms.
Yeah, and can kind of
help steer a steady course. Exactly.
Now I want to touch on something that's often overlooked.
What's that?
Which is the psychological aspect.
The psychological.
Yeah, of investing.
Interesting.
We've talked about fear.
Fear and uncertainty.
But there's a whole spectrum of emotions.
It's true.
That can influence our decisions.
Yeah.
What are some of those other emotions?
So emotions can play a powerful role in investing, sometimes leading us astray.
Okay.
Think about greed, for example.
Greed, okay.
When markets are soaring, it's easy to get caught up in that euphoria. Make risky bets, chasing quick profits.
Like you just feel invincible.
Like you can't lose.
Yeah.
Right.
Okay.
And then there's the fear of missing out.
With FOMO?
FOMO?
Yeah.
It can drive people to make impulsive decisions. Buying into the latest hot stock without considering the fundamentals.
Yeah.
Or whether it aligns with their investment strategy.
It's like when everyone's jumping on the bandwagon.
You feel that pressure.
You got to join in, even if you don't know where it's going.
Yeah, you don't want to be left behind.
Okay, so how can investors avoid
falling into those emotional traps?
Yeah, the traps.
Self-awareness is key.
Okay.
Take a moment to reflect your own emotional triggers, how they might impact your investment choices.
Okay.
Are you easily swayed?
By fear.
Fear or excitement?
Yeah.
Do you tend to follow the crowd?
Okay.
Or make impulsive decisions once you understand
your tendencies.
Your own tendencies.
Yeah.
You can start to develop strategies
to
mitigate those risks.
So know yourself.
Know yourself, Know your strengths and weaknesses.
Okay.
You can play to your strengths and work on those weaknesses.
Improve your overall performance.
Absolutely.
Okay, so that's one strategy. Anything else?
Another important strategy is having a well-defined investment plan.
Okay.
And sticking to it. Yeah, so it acts as your roadmap.
Okay.
Guiding your decisions. Helping you stay on track.
Even when
emotions run high.
It's hard.
It can be, yeah.
To stick to the plan.
But it's like having a recipe.
Okay.
When you're baking a cake. you follow the steps.
Yeah.
Even when you're tempted to add extra sugar.
Right.
Or deviate from those instructions.
So have a plan.
Have a plan.
Know yourself.
Know yourself.
And don't let your emotions
drive the bus.
Drive the bus.
Okay.
That's good advice.
Good advice. All right. Last but not least, don't be afraid to seek out different perspectives.
Okay.
Talk to other investors.
Mm-hmm.
Read diverse analyses.
Well,
even challenge your own assumptions.
Okay.
The more informed you are, the more confident you'll be in your decision making.
Yeah. It's like gathering all the intel.
Like gathering intelligence from multiple sources.
Before embarking on a mission.
You want to be prepared.
The more you know.
Yeah.
The better.
The better prepared you are.
All right. So as we head into our final segment, we're going to distill all this information.
All this info.
Into some key takeaways.
Takeaways.
Yeah.
And leave you with
some thought-provoking questions.
Yeah.
To consider as you navigate the global market.
In Q4 2024.
It's coming up fast.
All right. Welcome back to the deep dive.
We've been on quite a journey.
Exploring the global market outlook for Q4 2024.
We've covered a lot.
Yeah. Developed markets, emerging markets.
Geopolitics, human emotion.
Yeah. A lot of moving parts.
It's a lot to process.
But I feel like we've broken it down into digestible pieces.
Yeah, so you can actually use this information.
Make some informed decisions.
Yeah, so as we wrap up this deep dive.
I want to leave you with a final thought.
Okay, maybe with it.
Okay, so think of the global market as a massive ocean.
Okay.
With currents pulling in different directions.
Okay, I like this.
So developed markets like the US and Europe, they're like strong currents offering stability, potential for growth, but there are also undercurrents of risk.
So even in those calm waters.
Yeah, you got to be careful.
There can be some surprises.
Exactly. Persistent inflation.
Yeah.
The possibility of central banks raising interest rates.
To kind of cool things down.
To cool things down, yeah.
Okay, and then we've got...
And then you have emerging markets.
More like
uncharted waters.
Yeah.
Exciting opportunities for exploration.
Discovery.
But they also come with increased risks and volatility.
So how should our listener navigate all of this?
It's a good question.
This complex and ever-changing landscape.
Yeah. What factors should they be weighing as they...
Chart their course.
Chart their investment course.
Yeah.
Well, there's no one-size-fits-all answer.
Oh.
It all comes down to your...
Individual
risk tolerance, financial goals.
Yeah, your timeline.
Investment timeline.
Are you saving for a down payment on a house?
Yeah.
Or are you planning for retirement way down the road?
Big difference.
Big difference.
Or maybe you're looking for growth opportunities to build wealth over the long term.
Yeah, those are all very different scenarios.
Very different.
That would definitely influence how you approach investing.
Absolutely. But regardless
of
your individual circumstances,
there
are a few key principles
that can help us.
That can help you navigate
these waters
successfully.
All right, let's hear them.
Okay, first, stay informed.
Stay informed.
Keep your finger on the pulse of global events.
Okay.
Economic trends, those geopolitical developments.
Right, because knowledge is power.
Knowledge is power, especially in investing.
Especially when it comes to your money.
Absolutely.
Yeah, okay, so stay informed.
Second, stay curious.
Stay curious.
Don't be afraid to ask questions. Challenge assumptions. Seek out different perspectives.
Talk to people.
Talk to other investors. Read different analyses.
Yeah, do your research.
Do your own research, yeah.
Okay.
The more you understand, the more confident you'll be.
In your decision making.
Exactly.
Okay.
Yeah.
So stay informed. Stay curious.
And finally,
this is the big one.
Perhaps most importantly,
stay
engaged.
Stay engaged.
Don't just passively watch the market from the sidelines.
Yeah, get in there.
Take an active role in managing your investments.
Okay.
Make adjustments as needed.
Right.
And always seek opportunities to learn and grow.
It's like you're the captain of your ship.
You are the captain.
You've got
to stay alert.
Adjust your course. As needed.
Be ready to navigate those ever-changing currents.
Yeah, and that's what this deep dive has hopefully given you.
Tools and knowledge.
The tools and knowledge to do just that.
Keep an eye on those trends.
Stay curious.
And most importantly, approach investing as an ongoing journey.
Of learning and discovery.
Absolutely.
All right, well, that wraps up our deep dive.
It does.
Into the global market outlook for Q4 2024.
We made it.
It
was a long one.
We hope you gain some valuable insights.
Yeah.
Remember, investing is a marathon, not a sprint.
Pace yourself.
Yeah, and with the right knowledge and approach.
You can navigate the market's complexities.
You can reach those financial goals.
You got this.
All right, well, until next time.
Keep exploring, keep learning.
Walking down the street again, sunshine on my face, my friend. Feel the rhythm in my feet. Every moment is so sweet. Colors bright